Yeah.
Yeah.
What up?
What
You
up,
know what
though?
I'm saying?
Happy Sabbath, though.
Yeah. Know what I mean?
It's 20 degrees outside.
Boy, add in the wind chill.
Man, did you go outside? I went outside and got pushed by that by the wind for a hot second.
Yeah, I ain't even go play with that. Yeah, that because you can hear it. You can hear it. Like,
yeah.
I'm like,
It's
man.
serious business, man.
I'm good.
You know?
I'm good. Well,
Shout out to all of our people, those that are here, those that didn't get here yet, and those that,
yeah,
that, they say they on their way.
And the ones to be back later. Yeah, so this is Heyward CPA live. I gotta get an echo effect on it.
Chicka. Hold on, we could go with we gotta hit some of this joint right here.
Oh, we on it like that today. Okay, yeah. Yo, I don't want to get the show. Good morning.
Good morning.
That's I don't want to get too I don't want to confuse Sunday with today or something.
Oh yeah, no, I get that.
But you know what? I might do it one day. Like we just flip it up in the middle of the joint. I'll just be like, flip the camera and just start playing records. Just start playing records. They be like, yo, something's really wrong with these people. Would you trust these? Would you trust these guys with your financial well-being? Well, you should. You should trust yourself anyway. But that's another conversation. So, here we are.
Relative. Yeah, what up? So it's all relative.
Yeah, it's all relative. You know what I'm saying? Okay, we got you on the tube. Yes, sir. Yes. VIP Rush. You know what I'm saying? That's VIP Rush. It's my cousin.
VIP.
Oh, okay. I don't know. This is one of them. She could be anywhere in the world at any given moment. For real, dude. You just never know. So
she like air. She's like air.
Yep. Just so you already know where you be like, yo. So no need to even ask. You just be like, you just see the pictures after, which is dope.
Right.
Like, yeah. So this was
listen, don't tell nobody where you going, tell them where you been.
That's right.
I mean?
That's right.
That's how that goes.
Absolutely. I ain't mad at it. So I congratulate it. But so we
you got the red cup early on a Saturday, bro.
Yep, I sure do. It's a shame, boy. It's a shame. No, but it's it. I guarantee you got Batman. Yeah. Well, see, I'm hydrating. I
am too. I'm hydrating too.
No, but I'm just saying because of the red cup.
I'm drinking some tea.
Yeah. So what kind of tea you want?
Oh, today I'm on that peppermint, man.
Very good.
I love peppermint tea. You know what I mean? And later on, I'll go to my peppermint and ginger.
Okay.
You know?
So you on that time. Like,
yeah,
I'm out of my black tea. I drink tea like British people now. So I drink tea with cream and sugar.
You got the little plug-in kettle. Hit the button, fill it up, hit the button, and it percolates.
No, I actually got a kettle. The tea, the one that sit on
Yeah.
I mean, I wish I had gas, because putting the tea kettle on the gas stove is like that's as classic as it gets. That is the most classic thing you can have going on.
Absolutely.
But it is interesting. I know this is everybody like, what are these cats on? But what's interesting is the tea, based on the version of the electric tea kettle you get, I know this is gonna sound crazy. The quality of the water is different. Like when you get the cheap plastic one,
you
might get that from Dollar General or something.
Right.
Not the same as the glass one.
Right.
The glass one it's like
because it holds the heat. Right. It holds the heat.
Yeah. Okay. I just knew.
You know what I mean? Yeah, it holds the heat.
Yeah, I used to have one. Don't know what happened to it.
Yeah, I got that, and it stayed like it'll stay hot for like an hour, like hot. It'll stay, and then it'll percolate down, right?
Yeah.
But Yeah, and then I just go flick the button, but it stay hot for an hour, so I can have me 2 cups in an hour.
No, okay.
You know?
Well, yeah, well, that's good. Yeah, that's good. That's this.
Yeah, I backed off of coffee a little while ago, and I still love coffee, but I haven't had coffee in probably about maybe 4 months.
Yeah,
It's been about 4 months.
I've had some runs like that too. But I'm back now because because I ran out of the black tea, so I've had to make espresso.
Okay,
with a
now,
mocha
that's my
pot.
joint.
Yeah,
That's
with
my
a
joint
mocha.
right there.
I got the mocha pot. I got it down. It's the Italian method of making it.
I want to get me one of those machines. I don't have one. I always wanted one. I just never was serious about it.
Oh yeah, nah. We not about that machine. I'm just taking the thing you make it on the top. It is really good. And you know, I got the little espresso cups.
Mm-hmm.
I did it the other day before I went in for the procedure because I could only have black coffee.
Right.
Took a half teaspoon of sugar.
You had the little spoon. You had the little spoon.
That's what I didn't have. I need the little spoon.
Get the little gold or silver spoon, bro.
Yeah, that's what I need.
Absolutely. Yeah.
And what I'm missing, which I misplaced my pinky ring that I've
right.
Where like 2 years. That's all I need. And I'm like, so I'll be on it, man. So
just get you a hanger and turn it into a pinky ring for now.
Yeah, I might have to
make a little dove or something out of the
thing,
the hanger, and it's
just like back in the day. Back in the day, like back in the day when you used to make a ring in school. Like in elementary school, you make a ring.
with the bread ties and whatnot.
yeah, or paper. You can hit with paper.
True.
Anyhow, all right. I guess none of y'all came in here. Y'all not having as much fun as we are.
Not true. They don't know. We had a long week of work.
2 weeks. It's been 2 weeks.
2 weeks. Yeah, true.
It's been 2 weeks. We had since we had Miss Keisha.
Mm-hmm.
Miss Keisha. We got a lot of feedback on Miss Keisha.
Nice.
Oh yeah,
nice.
The dollar bill ring. Yeah, yeah, that's what I'm talking about. Yeah, I remember that. That's right. Yeah, the Miss Keisha came in, told her point of view on the getting your taxes done with compassion. That's awesome. Compassion. And so what I'll say is this. I'm gonna give Keisha some props here. So maybe she's instilled a little bit of compassion.
Un poco, huh? You going Espanol today? Ooh-wee.
Yeah, un poco. A little bit of compassion. But we really have been the last 2 weeks. We've been getting ready. The season is here. Finally start on the 26th, and we've been getting all our prep work in effect happening, like doing everything we need to do to get people started. People are just to follow up on that, and I guess taxes for the next couple of 3-4 episodes will be the thing. I think we probably could talk about business taxes because they're up next. And what we mean by business taxes, if you're a partnership or your S corporation, they're up next. They're due March 15th.
Mm-hmm.
Wow. That went by fast. But those are coming up, and people ask often, okay, my business taxes, what can I deduct? And we'll reference to the Ask Jay the CPA, Ask Jay CPA. What are business deductions? But we'll recap that today for everybody. Business deduction is something that's ordinary and necessary for conducting the business that you're in. So, like if you, I don't know, let's take a business. Throw me a business. Throw me any business.
Candle maker.
Candle maker. Okay. So a candle maker. You need wax. You need wicks. You need the kettles and the pots, whatever you burn it with. You know, fuel, a location to do it. Things like packaging.
Yeah,
things
labels,
like that.
Yeah. Mm-hmm.
But what you don't need is a G-Wagon.
Wait, why not? 6,000 pounds. It's a write-off.
But it has nothing to do with your business. Like, what it has nothing to do with. Has nothing to do with it. And, you know.
Yeah, but what if we making deliveries in it?
Well, okay, this is where we get to something different. Yes, in theory, you could use it. But here's the thing. If you make 2 deliveries a year in it, you don't need it.
Right.
Oh, we got a lot of different.
Oh yeah. Oh,
yeah, look at all the suggestions we got
right now.
Yeah, everybody. Okay, you know what? Yeah, you know what? That's a good one. With Coop got
which
there.
one? Social media influencer. Yeah.
That's a good one. Let's do that one.
Yeah. Good morning. Good morning. Good morning. Good morning, everybody.
Good morning.
I knew arrivals.
That's right.
Oh, look at Pops. You see what Pops say?
Oh man, yeah, he's on here too. Oh my gosh. So look, this is what I'm saying. So social media influencer. You don't need much. I mean,
well, no, you need microphones, computers, screens, lighting, clothing. If your clothing that you wear,
but that's where you get jammed up.
No, hold up. I'm just throwing out what
they think.
In the
mm-hmm. Okay, clothing.
You go buy me. I need $300 frames.
Yo, yeah.
You know, so I can see on through the camera. All right, go ahead.
No, but people think, all right, clothing. If you wear regular clothing, it's not a business deduction. Like, I love the people that say, like, especially say consultants, well, I have to wear a $3,000 suit to land clients. Yeah, well, the IRS says you can do it with a Walmart suit. So sorry, nope, can't deduct that. I had to get my hair cut every week. So will you only show your haircut when you're doing business? Absolutely not. Nope, that's not a deduction.
Well, some people can take it off though.
That's different. That leads what that now but where it comes in is in costumes. If it's a costume or a uniform, bona fide uniform, where there's a clear distinction when you're working this. So, like if you're a clown and you got a wig, some clowns wear suits, but I digress. The point is that if you're a clown and you where you can deduct stuff like that. Uniforms, usually things where, if you blue collar, you wear uniforms, stuff like that. But when you wear ordinary clothes and things like that, people, it's not a deduction. You could be, I got to get my hair, nails, feet done. Even though, well, all right, we're going to leave that one alone. But we can just... No, you can't really argue that neither, because it's something, if it exists in your everyday life, it's best not to it's best not to deduct that.
Right.
And remember, this is what we have to explain. The tax system is an honor system, folks. It's an honor system. For real. And it's not like they don't find it the year that you're doing it. That's not when they find it. No, they don't do it then. They find it like 2 years later. Maybe 3 years. Max 3 years. But what you have to understand is, once they're like, like pit bulls. Once they got you and they in there and they start examining, and some things don't add up, they go back. Then they start looking.
So what I hear you saying is the importance of having a recording system, bookkeeping system that makes sure things are aligned properly year over year over year, so you can catch any discrepancies and you can categorize properly so you don't have those mishaps. And if you have a mishap, you can show where that came from. Is that what I'm hearing you say?
That's part of what that is. That's the underlying of what I'm saying. The underlying, the overlying is you need to be honest about what money you spend to run your business. Now,
Right.
people, things happen. All right. No one's the most concerned because we entrepreneurs over here. As a CPA, we're not saying like, oh, go running high, don't deduct anything. Ooh, I wouldn't deduct. I'm not saying that. But one thing, since he's watching, so that I did learn from my father is, to sum it up, is it gotta make sense. And here's the thing: you want to give them something. Don't try to keep it all. This is just general business. Don't be greedy. Don't be greedy. Like, don't be greedy. I've said it before. I ain't gonna say it too much because we about to put them back on. But if you're making international trips for your company, for your board meeting, and the board is your immediate family, if I was an IRS, agent, revenue agent, I'd disallow it, because there's no way you sitting here telling me that this is your board with your children and the board is directing the business. It's not happening, right? You just save that. And then you spend big money, come on, we can't do that. Like, there's enough to spend on the business. Like, trust me, I know. There's enough stuff out here for you to spend money on, without a doubt.
Mm-hmm. Mm-hmm.
And so, but people get, I think what we have to do is, with tax administration, is have a different attitude towards it, because people look for silver bullets. They look for, they come to us and they're ready to say, well, are there any deductions? They start talking low too. So, are there any deductions out there that I can do? Like, we making a shady deal in the parking lot. Like, I'm just going to tell you, ooh, here's a deduction they didn't tell you about. Like, dude, run your business. And this is why I'm all about making profits. I mean, come on, man. You can't operate on just chasing deductions. It's that is if you're building a business. If you have a job for yourself, you're self-employed, okay, I get it. I don't want to pay as much. But come on, man. That's all I'm saying. It has to make sense. It has to.
Yeah, so just got to have the right tools in place. You got to have the right support in place as well, right? So, I know with all of what you said makes sense, and those are scenarios going to keep coming and going as much as, we try to get people aligned, but there's tools for that. So you could be aware. A lot of times it just comes, I think what I've experienced is people come to us when they look at that, it's the end of the year, they got a file, they look at that big fat number and they like, wait a minute, where did I spend some of this money? Oh, that's where we get into, can I write this off? Can I write that off? You know what I mean? But they're looking at spreadsheets or bank statements and not having a system in place, to have the conversations and understand what it looks like. So,
it's reactive. In short,
yeah, get some tools in place.
Yeah. So, and then it goes. But I'm going to take another one out this pot here.
Mm-hmm.
The best are the real estate. Just check this out now. This is the one I love. Real estate investors. Now, there's people that may know me know I always have something to say about the real estate investors. And I don't mean like people that's big time, they do real estate stuff. There's the people that's they decide they're gonna go in business of rental real estate investor. Well, here's the thing. By definition, investment is passive. I just want to lay that out there. Investment is passive. Okay. But people go in and then we can understand the deductions against the rental income, the stuff for the property that we have. But then, well, I got mileage going back and forth to check on the property. Even though I got a property manager. I'm checking on property for. I took a trip to another city to go look at another property that I might buy. Sure you did. That city just happened to be Paris. Okay, cool. That's whatever you want to do. People are they reach for stuff. Now, if you are truly doing it and you run due diligence, you up there, you making offers, you doing this stuff, I get it. But you're doing all this and then you tell me you work 70 hours a week because you run a department in a corporate business. There's a zero chance that this is happening. There's no way that is happening. You're telling me you spend, because a real estate professional by IRS definition means you spend over 750 hours a year on real estate possession. So
no, you just flew by something real quick.
What? Yeah, that's how I do.
Back up. You said 750 hours?
Yeah.
What does that mean to the people?
No, I was about to say.
Oh, okay.
A full-time work schedule is 2,080 hours per year. And I'm using this scenario that I'm talking about. If you, for these type jobs, often it comes up, you working 60 hours a week. So you're spending 3,000 hours doing that. You got the rest of your life or whatever. Tell me where the 750 coming from. You know what I'm saying? 750, not 75. 750.
Yeah. Do you think that's details that most people miss? You know, and maybe it's not Google-fied?
They don't know to look for it because you know it's. I mean, real estate, because I went and took either my old house or bought a house and I'm flipping it and I'm doing whatever. I'm renting it out, Airbnb and all that. So I'm doing it. And to be honest, a lot of practitioners, we don't run hard and fast with the passive activity laws. Okay, so it's passive activity. I mean, you know, but these are the facts. And once again, remember from my honor system thing, it's when they get you, you know, like we take this stuff as like it's better to stay ready so you don't have to get ready. What you brought up earlier, that's staying ready. And then that's looking and saying, well, like, are you really 750 hours? Really? 75? That's about a little less than 75 hours a month. 75 hours, part-time job. It's about 20 hours a week that you, you know?
Yeah. So
12, less than 12, about 12. But are you really spending that time as a real estate professional? And that does not include telling all your friends that you got rental property or something like that.
Right.
Hey, but then you come dump all these things that I know clearly are not related to that. Now, granted, there's limits. Like I said, it's not a hard and fast thing, but I'm just trying to, you know, show like there are actually rules behind these things and what the IRS is thinking if you ever get in the claims. And from the time that I started preparing returns, even on the individual side, I do look at them as if I was, you know, a revenue agent, would I believe this?
Right.
Yeah. That could be the Heyward CPA difference. That I really do look, and you know, sometimes that we've had it, and I'm like, nah, you can't. We not doing that. We're not finishing out like that. Like, this is just too much.
Yeah, perspectives is important. You see it from the client's side, and you see it from the IRS agent side, right? That way you have a really good return.
Yeah. And that's a big, but when you're dealing with business, because you're really trying to, because this is what happens. We just had a case we talking this week. People try to milk down either underreport revenue, which is definitely bad if they catch you. This is all about if they catch up with you, underreport or overinflate expenses. Then we want to buy a house this year. It's always this year. I'm trying to go buy a house this year. I need a copy of my tax return. Blah, 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 blah. I turn into the bank. Hey, man, they said I don't make enough money. Shoot, I got cash. I got all the money you're talking about. Yeah, but for the last so years, you've been telling us that you ain't want to report this. You ain't want to report that. Uh-oh, we lost you. Yeah, we know.
No, you didn't. I just muted for a second. It's all.
Oh, there you go. All right, there you back. Yeah. So, like people want to do that. They have one way thinking of stuff and saying like, yo, and they don't want to. Now they need to do something with these records, and it doesn't show what they needed to. So that you want to come back and amend. I've heard people amend their return to go buy a house. And all of a sudden they amend to put the stuff up and just take the tax hit. Like, it's ridiculous. You just like, come on. Well, I'll tell you, we not doing all that. That's, it is what it is, bro. Like, so, but because we follow the getting your stuff in order, then, we report what you got going on.
Mm-hmm.
So it's cool, man. It's just like, look, people have to understand and be realistic about business. And that's why I'm not this big. You never hear us touting, get the most in business and all that. Like, nah, man, I'm about you making a profit. Because as I say all the time, if you don't have a profit, you're not going to pay taxes anyway. So what are you worried about? My thing is that you day one, and I get it, but day one, you talking about you worry about taxes. Like, have you sold anything yet? No. Then what are you worried about? You need to worry about the business working first. Then we can get back to the taxes. How about that?
Tax planning. That's what it is. Tax conversation, tax learning, tax understanding. Well, let's go. We did have another business scenario if you want to talk about it.
Sure. I'm ready. Get my ready.
Dry cleaning.
Oh, dry cleaning. I'll see a dry cleaner. That's a storefront. So, obviously your rent, your insurance, the utilities. Most dry cleaners now really like they don't outsource it. They do outsource it. The processing is rarely done in a lot of these dry cleaners now because of environmental stuff. So they send it out, but you still need the machines, like the little spin machine that keeps that brings your clothes in there. So it's machinery, is an equipment thing, and obviously payroll and things like that. Condo in Miami, not really necessary for you to do that business. You have a dry cleaner in, we'll just say North Carolina. All right, it's not necessary. I'll even bring it back at home. You have a dry cleaner in Greensboro, and you need a condo in Charlotte. No, you don't. Okay, so that's there. You want a condo in Charlotte, you take the distribution, pay tax, and go buy your condo in Charlotte. I don't want to see your condo in Charlotte on your books. Like, what is this? I don't understand what this has to do with your business. So, I mean, you might try to say, "Oh yeah, it's our satellite office." No, it's not. It's your condo. So, and I'm saying it in just, but I've seen stuff like this. Like, people have just really bought things, and people will put them on the books. And quite frankly, a lot of if you come in with that, I mean, it's not my job necessarily to take it off and all that, but it's for me to let you know. And, it's a cost benefit thing. Hey, if you willing to pay the price, if this goes belly up, do what you want. But here goes this memo on me telling you that this is not proper. This is not following the rule of Section 162. That's up to you. That's what I'm saying. I know that's what I was talking about. I was trying not to blow it up. Nicole just said, I'm trying to keep it on the low. But yes, having a party and calling it a promotional event for your company, but it's your child's birthday party. That's definitely not. You got the dry cleaner. You have an anniversary event at a high-end hotel with 100 of your closest friends, not your customers, your closest friends, and saying that, oh yeah, I'm just writing that off for the business. And the reason, so people say, well, I like nice stuff. I have nice stuff for my clients. But most business people are not going to spend that kind of money for a customer appreciation event. Like that's just the business case. Like, are you kidding me? Like, no, you're not going to do it. So it's not for your business. All right. Just let's get over that. All right. And it's people. I mean, some people use the piggy bank approach. Their business is a piggy bank.
Let's talk about trinket makers, artists, people that make things, right?
Well, they're usually, all your materials come into play. You need, all your material costs. A lot of times those are sole proprietors and they do the stuff themselves. And so you similar to where we are based on where you work. If you work at a home, we got a business use of home deduction for you. What businesses of that size will lead to our next topic often have to work on is marketing and promotion. So those things, those type of costs, fees for accepted credit cards, all the businesses we've spoken to, fees for accepting credit cards, those are expenses. But also, and I think we're doing the injustice, I mean, professional fees, payroll service, accountant, business coach, consultant, people that can actually help you grow the business. Just anything like that. Those are business expenses. And I think one thing to think about is that a business expense, not only is it ordinary and necessary, but you want to spend the resource to grow the business, presumably.
Right.
Because
that's the you got to spend money to make money scenario.
Yeah, but see, the problem with that statement is people just think they spend money.
That's why we're clarifying it right now, right?
Yeah,
so that's where that falls into that bucket.
But you want to spend on resources that lead to the business growth, right? You don't want to just spend money it take money to make money. That's after you done bought something crazy, and then talk about, well, you justified in your mind. Well, you gotta take money. Takes money to make money. You in need what you bought. It's okay. It's all right. It's 2 words. It's a 3-word phrase that people who say in business. I messed up. If you never say that, you ain't doing too much business. It's as simple as that. So you have these things that, you have to be able to, those are things, those are more like, I'm not to get too technical. Those are expensive, but those are resource expenses. Those are things. There's soft costs that go into, like, if you have a product, there's soft costs that go into it that might help you. Those are the things that you have to spend on. And I say that for the framing, to say, look, you spend money in business to grow the business.
Right.
You don't spend money in business to scratch your an itch you have. I'm to say, well, I always wanted that. You know what I'm saying?
Mm-hmm.
Oh, she on fire today. So
Mm-hmm.
that's this year. I'm gonna address that one. We'll put that one on the screen next. You know what I'm saying? But what it's the approach. What I'm trying to get through today is an approach that business expenses aren't, and they're really not deduct. We could get down into deductions against expenses, whatever. Business deduction, fine. It's reducing deducted from your income.
Mm-hmm.
But as a business owner, you want to do things to grow your business.
Right.
That's what you want to do. And hereby it will grow your profits. And you grow your profits, you pay the tax on the profit, and you go buy whatever you want. Once the taxes are paid, you can spend it however you want to. Burn dollar bills in your fireplace. Go ahead and do it.
You don't want to do that either.
I don't care what you do with it. Just say like, hey, once you paid the taxes on it, like
I wouldn't even tell them that. They'll be knocking on your door for that one.
Look,
especially
no, I'm saying after the
it.
taxes paid, right here. Like that's your money. You do what you want to do. Now, is it prudent? No.
Right.
Does it make sense? No. That's a whole nother financial planning thing. But just in this scenario, when we talking taxes and business, that's what's going on. But let's address this question here. This is she done pulled the serious question right here. All right, you got it, or you want me to?
Oh yeah, I got it. I got you.
Okay. So, so Nicole Cooper, who we thank for being on. You know what I'm saying? I don't know if we should, but we send our condolences to Ms. Cooper right now.
Absolutely.
We are glad to have you here. Glad you're with us for a little brief moment of ridiculousness with us. So, but let's ask this question. Oh no,
transportation.
Yeah, but we'll get back to that. I'll do that quick. Yeah, childcare, which we know a lot about. Same thing. Facilities, feeding them, big cost, big expense. Feeding the children, very big expense. Supplies, and the bit with childcare, a lot of it is people, personnel. That's the highest. That's usually the highest expense that you will have will be personnel. If you're a one-person operation, you won't make but so much money, and you won't be doing it for long. If as a business, now there's people that look out for people's children, but definitely that. Medical transportation, big things there are obviously now we get into vehicle maintenance, leasing of vehicles to move people around. You're not moving medical patients or elderly patients in Maybachs. You can't convince me. Maybe a Lamborghini. Not necessary. Not necessary.
Right.
It has nothing to do with the business at all. Big spot there. And insurance on those vehicles for transporting people, high next to the personnel. Very high. Very high. We have experience with all of this. Well, I guess she knew that, right? So I'm just sitting there like, wait a minute. I'm speaking from experience. These are not theories. I'm telling you, these industries we've been speaking about, like we've touched them. So, understanding what the expenses are. But once again, the soft costs, the soft expenditures that we talked about, the consulting, payroll service, accounting, legal, coaching, change management, things like that. That's a lot of businesses they're not in tune to that. They don't know nothing about that. They're like, what's that? I ain't doing that. Now, those are the places, marketing and promotion. Those are the expenditures that help these places succeed. And I do want to speak about one other thing. within this. People that have they're basically their customers, the government. So
Right.
an unknown expense that's not deductible, but that needs to be thought about. Don't take this the wrong way. Political relationships. And now, when you give to a politician or something like that, that's not deductible on no level, nowhere. As an individual, that's not there. It's personal. But as the owner of a business, especially, we'll stick with the business, but you have government contracts. It is in your best interest to know some politicians. Just is. Because people, and what happens is a lot of people, especially when they get Medicaid or Medicare, something, they doing that type work.
Mm-hmm.
They just believe that they're getting paid on the merits of what they do, but it's a predisposed rate. Like, you got the merit of getting the contract.
Right.
So now you got to protect the stream.
Right.
And it's one of those things like you can lose it,
mm-hmm.
but you don't get too many attaboys per se, from what I've seen.
Right. Right.
So to grow and maintain, especially if something goes left, you want to have relationships with people that can help moderate you, help you work you through situations. So that's another soft expense that we won't reflect on the taxes. You have to take it out of your own personal pocket. But what it does is it protects the revenue stream. So you protect the revenue stream, which is what you want to do. You want to protect the revenue stream. You want to make sure that if something happens, you don't have a problem. And that's something that, just thought I'd put it out there. I thought about especially like the transportation, medical care, and childcare. Some people do it under nonprofits. Even if you're a nonprofit, I will say that having relationships of that manner, and sometimes it may not even take money, but it's good to know that no people in the agencies have somebody you can call, doing things like that. So here we go. We're getting great questions here from the Coopster. So having consecutive loss after 3 years is a hobby or business. What should I consider? Very good. It's like a Samaj question. So, look, about these business expenses, whatever, there's a point in time where if the IRS comes in and looks at you and you've had losses for 3 consecutive years, but more so if you had losses like with no revenue, like you don't have any revenue whatsoever, you just claiming losses every year. Oh, I lost $15,000. I spent $15,000, and had no revenue at all, not a dollar, nothing. You can be subject to the hobby loss rules. What the hobby loss rule says, you're not really trying to conduct a business. This is your hobby. You're deducting these expenses. We're disallowing them, putting them back in your income. You owe us this. And, it can go into other penalties. We'll do a penalty show so we can talk about penalties. All right. But what you have is that. Now, this does not mean if you are actually conducting business and you generate a loss, or you're attempting to generate profits. Let's say, you doing it, you're not, you have big ticket transactions, something. Like, let's take a realtor, for example. You've been a realtor for 3 years, and you are real estate, but this is a whole different thing. And you haven't sold the house. You can argue. If you get questioned, you can argue it. But you're going to have to prove that you have actually been out here, trying to generate revenue. So, and that's another thing where you want to be careful. If you're not, you pay for, oh yeah, I took my kid to Mexico for spring break. It was a business trip because like you like, okay, so you made no money. you got travel expenses, which will take about the majority of what your expenditure is to take your child to spring break. And what was that business purpose again? Like, oh, I get it. You were scoping out the resort.
Have fun.
No. Of course, they were scoping out the resort because they were going to buy it.
Yeah. Oh, buy it. Wow.
Yeah, they won't buy the resort. Maybe a timeshare, but you won't buy the resort. This is what I'm saying is common sense. but because taxes are a thing where you can stick stick the fork in the outlet and it doesn't shock you immediately. So people just they just do whatever. That's like the big. They just like, oh, well, and then we get the stories because that great practitioner, somebody CPA or somebody EA or somebody tax lawyer or and their cousin, I heard, right? So they usually come up with these favorable tax treatments that we can't really find in the code because somebody that they know did X, Y, Z. But that could be the beginning. It's like a book. You could have read the first chapter. Call me in 3 years. Somebody might be in criminal investigations. I don't know that. Just because they did that, what does that have to do with me? Because as a trained professional, licensed, unlicensed, it doesn't matter to me. We learn the code. We see this. We see way more transactions than you ever will see in your life. We see it all. And we see those percentage chances when they say it's low percent. Well, we see and we hear the stories because we talk to other somebodies that's us. When I had a client that. Man, it did? Yeah. Right? So we're going to see more than you. So it's cool. If you feel like for your, it's just some of the stuff is ridiculous. I've heard people have told me that they could go on a $10,000 vacation and do work while they on vacation and then get like deducted. That's business expense.
Like, next question. Next question.
Oh, we got a clinic going there. Wait. If I don't know if they prepared correctly, because I contact you to review. You can, but
that's be honest. Common question.
Yeah, but here's the thing. Here's the best answer. Wait. Oh, you don't know if they prepared it correctly. Yeah, you can contact us to review it. You're going to pay us to review it too. But of course, this gentleman over here next to the he's going to ask you, why do you think it's not correct? That's the drop the mic minute. Why do you think it's not correct? Why? Oh, because you owe money? Oh, okay.
And that's most of the cases that
most
come
of
up.
The cases. I don't think I
but then you go back to the question, well, how are you tracking your inflows and outflows of money, right? And and that's what it usually boils down to.
But see, this question is an emotional question. It's very rarely is it a factual question.
It is, but emotion is always tied to in some action or inaction.
Oh yeah, they tied to that, but the incorrectness is how you administered your money throughout the year, not necessarily how it was prepared.
Right.
Like that's why we over here we don't get too much, because I'm sure people do it to us when they go somewhere else. Whoever your last accountant is, unless they die or something, it was horrible. They made a mistake. They didn't call me back. They didn't do this, do that. And look, We're not dating. You don't have to impress us. All right. Cool. You wanted to make a change, make a change. Cool. Not a problem. But I learned, and I had to learn this early in the game. Don't believe that. Just don't look at the stuff for what it is. Because if you get sucked up and riled up in that, then you go look and you're like, oh, now you're like, well, this really isn't incorrect. And you send all these wolf tickets. Oh, I'm sure we could find something that they missed and do all that. Now what you're going to do, you look back and you're like, oh, yeah, okay. Oh, so you made $100,000 and you withheld $1,500 for the year. Yeah.
Next question.
We get full questions. This is it.
I received the tax notes recently, and I have several years unfiled tax returns. I'm afraid of the IRS. That's a thought.
You weren't afraid for the years that you ain't filed? No, I'm just saying. But you afraid now? Now you afraid? What about all the other years? Were you afraid then?
Well, no, I mean it's circumstantial too, right? It's people got things that's happening, and
I know.
So yeah. So
listen, I gotta be me, right?
Yeah, I get it.
That's how I think. I'm like,
I get it, but we want there's solutions. There are solutions to it.
No, I was getting to the solution. So my point is, there's no need to be afraid now. You got to deal with it. All right.
Yeah.
So here's the situation. You call us. Or call whoever you want, somebody you hear on the radio. But most importantly, I'm going to say this. Look, man, you got to get some money, man, because no one's going to fix this for free. All right. And what happens a lot of times with people in this circumstance, they hit the wall, all the money gone. And now they coming in with violins and all types of stuff. And they want you to make their pain go away. Well, it's not going away for free. Not with us and nobody else. So you wanted to get your money up because you had to file all those returns first. You got to file them first. That's it. So when I say, and we're going to talk some practice management too. When I said it in, being funny, but you weren't afraid all these other years. So guess who else you're not going to be afraid of? Or what you're not going to be afraid of? My invoice, because you ignored the IRS for years. So this is very important to understand that this is where lines have to come, because I mean, hey, who am I? You didn't even pay attention to them. And by the way, if everybody knows, the IRS doesn't just send you one notice, like that's the hammer notice. You've been getting notices for years. You've been ignoring them. Oh, it went to the wrong address or whatever. Okay, I got you. But somebody, you saw some other notice. All right. So you run into a relationship where we want to help you. But I mean, quite frankly, just going off your behavior, you got to you got to show me that you're really trying to resolve this now. That's what it is. And I hear your words. You're afraid of the IRS today. Why? You afraid of IRS because they garnish your account? Somebody garnished it. Now you're afraid? Like what? So what? And that's what I said. I could use the same tack. What are you afraid of? Well, they gonna take my stuff and all that. Okay. So it's a different relationship in tax resolution. And understand, we're here to help. We're trying to help. I'm not saying that like, oh, I'm talking down, but there has to be some sternness put into this relationship because you ignored this for a long time. Now, people that got to notice after 1 year or something, that's usually just, oh, I didn't file and income was reported, like 1099 income was done. I didn't do it, something like that. When you start getting 3, 4, 5, 6 years, and I understand things happen, but I can't, listen, in order to fix, you got to get tough love in order to get it fixed. Because it's just not going to be like, oh, okay. And I'm not, you know, it was one of them things like you attached to an anchor and I'm gonna try to jump in the ocean to save you. Nah, dog, I ain't sinking with your anchor. So we got to have a little space between us so that, you know, so that we can get it resolved. Because we have to stay somewhat, we have to stay objective. Because often in these cases, facts come up that they didn't mention when they called and told us they were afraid. And you're like, oh, oh, you forgot about that $150,000 stock trade that you made. Of course. Yeah. You make $25,000 a year, but you had $150,000 stock trade that you just happened to make. Oh, yeah, I forgot about that. Okay. Or you just, that $75,000 you took out of your retirement plan that, you know, you needed to buy the bigger house that you got now. I dig it. And they took 10%. 10% is just a penalty, people. We'll get into that in another edition. I'm just saying. See, you got me out here looking like, man. You got me.
Don't let you roll. Let you roll
like a real, like
let you roll. Let you roll.
Yeah. Well, what can you do? I'm just saying. We started with talking about business deductions and business expenses, and we moved into something. Now, the big thing is what these entity types we're talking about: the 1065, the 1120S. You know, in the end, it goes back to your personal tax return. They're what we call pass-through entities, and the taxation occurs at the taxpayer level, which is the owner. So there is some overlap with how we do individual tax administration. If you're Schedule C, you file on the 1040 as an individual, but these things apply too, because it's technically, if you by design, it's a pass through as well, because the business activity passes through. It just isn't on a different form and it doesn't have the same due date. So the things that we're speaking about, you know, are very, 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 very applicable. And it's probably a big piece we need to keep it going, because we're in a world where we can't say things one time. But I want people to feel comfortable. We're doing this exercise. It's impromptu. One of the reasons we do this is to be here to answer questions. That's what we're here for. And we spent 4 years blabbering, doing what we do, but it is really your place to ask questions. Tell a friend.
Yeah, we got a few more questions, but we'll wrap that up we'll bring it up on the next episode.
Yeah. So man, we at 11:59 already. Well, you can do that last one.
Time flies when we was having fun.
Yeah,
This one right here,
the entity one. Yeah. Okay. I got a good answer for that. Go ahead and give them the pitch.
How do I determine which tax entity is the best for my business?
Yeah, the answer is to call you. So talk to it.
Well, listen. Biz Therapy can walk you through that. It's one thing to remember is what are you trying to achieve in your business, right? And how are you going to achieve it? And then what do you know what you don't know, right? So there's our thought processes, there's how we feel about things, there's our perspective of things, and then there's a process of things and process tools and checklists, if you will, and systems, right? So yeah, Biz Therapy, biztherapycoaching.com. Check us out. We'll help you determine which tax entity is the best, because a lot of times people come to us and they think, one of the things we always get, I started an LLC, and I go, oh, you're a sole proprietor or S corp or C corp? I'm an LLC. First red flag. You don't know what you are, which you don't know what your goal is, right? And then how do you manage your expenses, your revenue in, revenue out? Bank statements. Okay. So determining what tax entity is best for you has a lot to do. Doesn't have it's not necessarily taxes, even though you're paying taxes. It's what business are you doing and what do you want from the business? What is the business going to provide for you? etc. And that's how you determine the best entity structure for your business, which will help you with your taxations. Right? If you're shooting for $150,000 a year and you think that's your best approach, that could be one thing. If you're shooting for $1 million, that's definitely another thing. But what's in between that? So again, check us out, biztherapycoaching.com. Next on KWK, when we talk about this book starting, this is a really good book. And this will help you start. It's called Starting, and it's by Andrew Priestley, right? How to think like an investor, that investor meaning another perspective. How to stress test the assumptions. So, not your personal assumptions, but the assumption of the business and the market and how they align, right? And then, how to build your business, right? So, we got to get back to our books because we've been talking about books all last year, but hopefully everyone has read some books, downloaded some books, listened to some books, took heed and took action from some books. um Again, if you're not here to learn, if you're not coachable, it's going to be very difficult for business, for you to be in business, because the tides are changing, the atmosphere is changing, the way the world is working is changing, and so you have to have um, the ability to learn, but you also have the ability. You need the ability to be able to weed out what's false information and what's not, right? And I won't even go deep into AI because AI is a great tool, but it can also be something that people play around with, and it causes distraction. So check us out, Biz Therapy Coaching, BIZ Coaching, biztherapycoaching.com. For your tax, reach us at HEYWARDCPA.com. Schedule your consultation. We'll get you on the calendar, and we'll begin to talk to you about what your needs are and see how we can help you. All right.
All
You got
right.
anything else you want to talk about there?
No, I'm just taking down all the great questions
Okay.
for the relaunch of Ask JCPA. Just a bunch of
Nice.
questions. Yeah,
Nice. Nice. Nice.
we trying to get the studio straight for it. I'm saying, you know, we working on it. But these were great questions. This is out. So once again, thanks to all our crew out there listening. The Heyward CPA Live crew, thank you. You know what I'm saying? We're gonna
Oh,
give
hold
you.
on. Before you leave, though, people, today was an unsexy conversation.
You think so?
This is what this entails. Well, I mean, we did some laughing and slight joking, but we got to the business of the business, right?
Yeah,
And it's the unsexy part that people don't like, and we get it. Who wants to do the unsexy? Who wants to do the things that you don't want to do? But it's a necessity. So
that's right.
again, hopefully you guys got something from this today.
Yeah,
And we'll sprinkle back in some high level fun along the way.
yeah. After tax season, we focus right
Right.
now. It's on. Like
Absolutely.
we on it like this. We running
No doubt.
tax clinic through April. This is
And business development clinics. Like, this is all of those things they're aligned together, right? They're aligned together.
yeah, but see, you don't unleashed me now, man. I got
Yeah, I
what kind
know.
of subjects
I
to
gotta put you
come up.
back in the cage. Let's go. Lock
No,
them
you
back
can't.
down.
It's on now,
Lock them
man.
back down.
I feel like I have to speak on my feelings of tax administration. I
Yeah.
mean, just real quick, you know, I'm not going to do it. That's very
Nah,
petty.
don't do it. You don't unsuppress it. Don't go that
Yeah.
far.
No, I was going to say something petty about
Yeah, I get
about
you.
a
All right. So
presentation I saw recently.
yeah,
So anyway, we
1206.
peace, y'all.
1206. We out. Pieces, deuces. Enjoy your Saturday.
All
Be
right.
warm for everybody that's in the cold weather.
No, that's right. That's right. Save the children. Peace.